Something just changed. And if you or someone you love is over the age of 65 and relies on a pension, this change touches your wallet directly. Right now, across the country, banks and financial regulators have pushed forward a brand new set of ATM rules that specifically target pensioners aged 65 and above. These are not rumours. These are not speculations. This is real. It is happening right now. And if you are not aware of these new rules, you could find yourself standing at an ATM machine, confused, frustrated, and possibly locked out of your own money. So stay with me, because in the next few minutes, I am going to walk you through everything. What the new ATM rules actually say, who is being affected and in what way, what you need to do right now to protect yourself and your loved ones, and most importantly, what nobody else is telling you about the real reasons behind these changes.
Let us start from the very beginning, because to understand why these rules were introduced, you need to understand the environment that created them. Over the last several years, financial fraud targeting older adults has exploded at a rate that regulators simply could not ignore anymore. We are not talking about small numbers. We are talking about hundreds of millions of dollars being drained from pensioner accounts every single year through ATM-related scams, card skimming, shoulder surfing, social engineering, and unauthorized withdrawals that were traced back to ATM transactions. The people carrying out these crimes were not random. They were organized. They specifically targeted elderly pensioners because they knew that this group visits ATMs more frequently, often during the same hours every week, and in many cases does not check their statements as regularly as younger account holders. Banks noticed, regulators noticed, and the response came in the form of a sweeping new framework that specifically addresses how ATM access works for pensioners aged 65 and above. Now here is where it gets important. The new ATM rules do not just affect one bank or one type of account. They are being rolled out across multiple institutions, and they carry real consequences for how you access your pension funds at the machine. The rules cover four major areas: daily withdrawal limits, transaction verification requirements, card replacement protocols, and time window access restrictions. Let me go through each of these in plain language, starting with daily withdrawal limits. Under the new rules, pensioners aged 65 and above are subject to revised daily ATM withdrawal caps. In many cases, these caps have been lowered from what they previously were. The intention, as stated by financial regulators, is to reduce the risk of large unauthorized withdrawals in a single transaction or a single day. If a scammer somehow gets hold of your card and PIN, the new limit means they cannot drain your account in one visit. That sounds protective, and in theory it is. But the practical reality is that many pensioners who rely on cash for weekly expenses, medical costs, caregiver payments, or grocery shopping are now finding that the amount they used to withdraw in one trip no longer meets their needs. This means more trips to the ATM, more transaction fees for those on certain account types, and more exposure to the very risks the rules were designed to prevent. It is a complicated trade-off, and thousands of pensioners are currently navigating it without proper guidance. Moving to transaction verification requirements, this is one of the most significant changes and also one of the least understood. Under the new framework, ATM withdrawals above a certain threshold by pensioners will now trigger an additional verification step. Depending on your bank and your account setup, this could mean a one-time passcode sent to your registered mobile number, a biometric check at certain next-generation ATM machines, or in some cases a callback verification, where the transaction is temporarily held while the bank contacts you to confirm it was authorized. For tech-comfortable users, this might seem minor, but for a significant portion of pensioners, particularly those who do not have a smartphone, whose mobile number on file is outdated, or who are in areas with poor cellular coverage, this verification step is a genuine barrier. there have already been documented cases of pensioners standing at ATMs waiting for a code that never arrives because the number on their bank account is years old. This is urgent. If your contact details with your bank are not current, update them today. Not tomorrow, today. Now let us talk about card replacement protocols, because this rule change is one that catches people completely off guard. Under the old system, when a pensioner reported a card lost or stolen, or when a card expired, the replacement process followed the standard bank timeline. Under the new rules, there are enhanced identity verification requirements before a replacement card is issued to any account holder aged 65 or above. This means longer waiting times in some cases, additional documentation requirements, and, in certain circumstances, a mandatory in-branch visit to verify identity before the new card is released. For pensioners with mobility challenges, those living in rural areas, or those who depend on their card for daily expenses, this waiting period can create a serious hardship. There are already advocacy groups pushing back on this aspect of the new rules, arguing that the identity verification requirements should not create access barriers for the very people they are designed to protect. But as of right now, the policy stands, and you need to be prepared for it. The fourth area is time window access restrictions, and this one is causing the most conversation. Several banks, particularly those operating under the new Senior Financial Protection Guidelines, are now experimenting with or fully implementing time-based restrictions on large ATM withdrawals for pensioners. What this means in practice is that withdrawals above a certain amount can only be processed during specific hours, typically aligned with banking business hours, so that if a suspicious large transaction is flagged, a bank representative can intervene. Outside of those hours, large withdrawals may either be declined or held pending the next available review window. Again, the protective intention is clear, but the disruption is real. Pensioners who live on tight schedules, who have caregivers only available during off hours, or who simply preferred the flexibility of 24-hour cash access are now finding their financial autonomy restricted in ways they did not agree to and in many cases were not informed about. So, who is being affected the most? The honest answer is that the impact is not equal. Pensioners in urban areas with multiple bank branches and good cellular coverage are navigating these changes with relative ease. The digital verification steps work because their contact details are current and their phones are smartphones. But for rural pensioners, the picture is very different. In communities where the nearest bank branch is an hour away and cellular signal is unreliable, the new verification requirements are not a minor inconvenience. They are a genuine obstacle to accessing pension funds that those individuals worked their entire lives to earn. There is also a deeply important conversation happening around pensioners with cognitive decline or disability. Family members and caregivers who help manage the finances of older relatives are now running into new friction points. The enhanced identity checks, while designed to prevent financial abuse, are in some cases blocking legitimate caregiving access. There are families right now trying to figure out the legal pathway to maintain appropriate account access for an elderly parent under these new rules. If you are in this situation, the key phrase you need to know is third-party mandate or lasting power of attorney, depending in your country. These legal instruments give designated family members or caregivers documented authority over financial transactions, and banks are required to honour them. But getting that documentation in order takes time, and the window for doing it smoothly is narrowing. Let us also address what the banks themselves are saying, because their communication on this has been inconsistent at best. Some institutions sent letters, some sent emails, some updated their websites with new policy documents buried inside FAQs that most customers will never find. And some said almost nothing publicly, leaving pensioners to discover the new rules the hard way, standing at a machine that declines their withdrawal without explanation. This is not acceptable. Financial institutions have a responsibility to communicate clearly, especially when policy changes directly affect vulnerable populations. And the pushback from pensioner advocacy organisations, consumer rights groups, and financial ombudsman offices is growing louder. If you feel you were not properly informed about these changes, you have the right to file a complaint through your country's financial services regulatory body, and that complaint carries weight. Here is something else worth knowing. Not every bank has implemented these rules identically. There is a regulatory framework at the national level, but individual institutions have some flexibility in how they apply the rules at the account level. This means that two pensioners at two different banks may have a very different experience at the ATM, even in the same city. It is worth calling your bank directly, not going to the website, not reading the app, but actually speaking to someone and asking specifically what ATM rules apply to your account as a pensioner over 65. Write down what they tell you, ask for it in writing if possible, and if they cannot clearly explain your rights and your limits, escalate to a supervisor. Now, I want to speak directly to the adult children and family members watching this. If your parent or grandparent is over 65 and relies on ATM access for their daily needs, please check in with them about this. Do not assume they already know. Do not assume the bank told them. There are pensioners right now who have encountered these new restrictions and simply walked home without their money, unsure what happened and too embarrassed to ask for help. That is heartbreaking, and it is preventable. Sit down with them, go over their account details together, make sure the contact number on file is correct and is a phone they actually use, confirm what their daily withdrawal limit is, and if there are any pending verification setups they need to complete. There is also a broader question worth raising here, one that goes beyond the immediate mechanics of the new rules. What does financial dignity mean for people over 65? Pension payments exist because people contributed to social systems or workplace plans over decades of their working lives. The money in those accounts belongs to them. The access to it should be simple, clear, and respectful of their independence. Rules designed to protect pensioners from fraud are important and necessary, but protection cannot come at the cost of autonomy. The best financial safety systems are ones that stop criminals without creating new burdens for the people they are meant to serve. Right now, the balance is not quite right, and acknowledging that is part of pushing for better implementation. What can you do right now? First, call your bank today and ask specifically about ATM rules for your age group. Second, update your contact information, especially your mobile number, so that any verification codes reach you properly. Third, if you use a caregiver or family member to help with your finances, look into the legal documentation options available to ensure their access is authorized and on record. Fourth, if you have already been denied access to your funds or encountered confusion at an ATM due to these new rules, document it. Write down the date, time, machine location, and what happened, and consider filing a report with your financial services regulator. Your experience matters, and it contributes to the data that shapes whether these rules get improved. The situation is moving fast. These rules are new, the implementation is ongoing, and the feedback from pensioners is only just beginning to reach the people who make policy decisions. Your awareness of what is happening is the first and most important step. You are not powerless in this. You are informed, and being informed is exactly where the power starts. Stay close, because as this story develops, there will be more updates, more details, and more clarity on how these rules will play out in practice. Share this with someone who needs to hear it, because right now there are pensioners across the country who still do not know that something changed 20 minutes ago, and they deserve to know.